Welcome back to The Explainer. Today, I'm stepping in as your managing director, and we are operating as your elite exam valuation board. We're going to completely decode one of the most notoriously misunderstood areas of the Cambridge Accounting 9706 syllabus, which is, of course, non-financial factors in investment decisions. Look, to secure top-tier A-star marks, you can't just memorize textbook definitions. You need to know exactly how the examiners are scoring you, almost like you're pitching to a hostile venture capital board. So let's get that grade valuation meter running and dive right in.
We are on a strict timeline today, so here's the agenda. We're starting with the investment factor problem, then we'll map out the core principles, break down the standardized procedural framework, unlock those high-ticket critical evaluation skills, and wrap up with a compliance audit of the top examiner warnings. Section 1. The investment factor problem. Let's face the market reality of exactly why candidates crash their scores right here.
This statement right here, it isn't just a casual opinion. It is a harsh market reality. Principal examiner reports explicitly flag non-financial factors as a massive critical failure point. This is the exact spot where otherwise brilliant, highly technical candidates completely bleed their marks. Why? Because they act like junior developers overloading a pitch deck with raw data. They rely on basic generic concepts instead of applying a rigorous monetizable business strategy. They give a descriptive pitch instead of an evaluative framework, and their valuation margin drops to zero instantly.
Section 2. Core Principles and Benchmarks. We need to look at the official academic mark scheme parameters.
So this quote is directly from the academic benchmarks, and honestly, it should be your golden rule. The assessment framework prioritizes analytical depth over superficial breadth. Listen, throwing a dozen shallow, disconnected facts at the examiner is like a founder rambling through a pitch without a business model. It's going to crash your score. Deep, structured, tightly connected reasoning is the only asset that actually maximizes your return. Quality over quantity, every single time.
To actually scale your response, you need to understand that the Cambridge syllabus divides your marks across three very specific cognitive domains.
Think of these three domains as your funding rounds. First, you have knowledge and understanding. This is your seed round, right? You're just proving you have mastery of fundamental principles. It's basic data classification. Next, you step up into analysis. This is where you build structured reasoning and risk models. But here is the secret. You only unlock the maximum top-tier grade valuation when you hit that third level, evaluation. This is your Series A funding. You absolutely must justify your decisions with hard evidence, and you have to do it in entirely new, unfamiliar business contexts. If you miss that, you miss the top band.
Section 3. The standardized procedural framework. Let's talk about systematic processing.
I want you to visualize this 5-step sequence as a strict, non-negotiable operational checklist that you carry in your head into the exam hall. Step 1. Identify the key elements. Step 2. Apply the relevant accounting principles. Step 3. Execute your analysis with crystal clear working. Step 4. Verify those results. And Step 5. Present it all in the appropriate format. Memorizing this exact sequence guarantees that you are flawlessly processing the data under pressure without dropping your logic.
Now this brings us to the method mark strategy, which is absolutely crucial. Marks are awarded for the process itself. Let me say that again. Examiners reward your procedural logic and your clear working just as highly as your final answer. It's like writing code. The end user just sees the result, but the senior developer, the examiner, is checking your architecture. You have to prove exactly how you arrived at your conclusion line by line. But of course, that method must be packaged perfectly. Your practical application requires strict adherence to professional presentation conventions. We're talking proper headings, correct industry terminology, appropriate financial formats, and incredibly clear annotations. Think of it as the UI and UX of your exam paper. If it doesn't look like a polished, professional business document, the board won't take it seriously, and you are literally just leaving free marks on the table.
Section 4. Unlocking critical evaluation skills. This is where we peak the valuation meter.
So at this point, you might be thinking, okay, what actually separates a mid-tier, average descriptive response from a maximum scoring evaluative masterpiece? How do I actually prove evaluative thinking on a piece of paper? Well, top-scoring candidates act like venture capital pitch doctors. They don't just passively read a case study. They relentlessly question the underlying assumptions of the business model. They actively consider different, sometimes opposing perspectives. They compare alternative approaches side by side. And above all, they build an unassailable, bulletproof justification using hard, specific evidence. They never just tell a good story. They back up every single claim with data.
Furthermore, they run a complete audit on the quality of the evidence itself. Top students will actively expose the limitations in the provided data. They'll spot hidden assumptions the business is making, and they'll map out exactly how alternative interpretations would impact the final investment conclusion. If the data's flawed, call it out. That level of critical analysis under pressure is exactly what the valuation board is looking to reward.
Section 5. Top Examiner Warnings. It's time for our final compliance audit.
Once again, we are back to the magic number 3. The principal examiner reports have isolated 3 massive compliance liabilities. These are the specific traps where students consistently crash their overall grade valuation right at the finish line.
Pay extremely close attention here. Mistake number 1, confusing cause and effect. Mistake number 2, forgetting to double-check format and presentation. And mistake number 3, which is the biggest one, providing generic answers that are not specific to the given context. You have got to make sure your logic flows in the right direction, your formatting is pristine, and your answers are entirely locked into the specific business case you were handed. No generic fluff.
Let me give you a rapid market scan of how this looks in practice. Let's say you're writing a response. If you simply use a descriptive approach, like listing a generic fact, saying something like employee morale might drop, without evaluating how that specifically impacts the target business's production output, your valuation drops instantly to the lowest band. An evaluative approach demands that you apply the specific cause and effect directly to the business's unique reality.
And right here is a massive, flashing red alert directly from the examiners themselves. Candidates consistently misuse terminology. Because of this, you must explicitly define your key terms before building them into your extended analytical paragraphs. Do not just assume the examiner knows what you mean. Prove to the board that you actually know the definition before you start evaluating the concept. Look, I know this is a lot of strict architecture to remember. To lock all of this in, I highly recommend using a visual story method. Next time you're reviewing a past paper, do a mental walkthrough. Imagine you are literally standing in a boardroom preparing to pitch this investment decision to a highly critical corporate board. Encoding these non-financial parameters into a real-world high-stakes visual scenario makes your recall under exam pressure basically automatic. All right, valuation pause. You now possess the exact structural blueprint the valuation board is looking for. You know where the traps are, you know the cognitive domains, and you know exactly how to scale your answers up to that maximum A-star valuation. So before you click away, optimize your educational asset flow. Make sure to subscribe to Ace the Exams and hit that notification bell so you never miss our high-yield strategy drops. And drop a comment down below right now, which Cambridge subject and level, IGCS, O-level, AS, or A-level, are you preparing to conquer next using this framework? Get out there, audit the material, and go ace that exam.